Now, we are just live now on another analysis segment also. And today we are going to analyze S&P 500. I think yesterday also the day before yesterday also I have made one video about S&P 500, how to see the S&P 500 return rate. Okay, so let me make you clear about what is mainly the S&P 500. Okay, I think there wasn't any animation, so sorry for that. I'm not making any animation for today, but tomorrow I'll try to make animation so easily you can understood about what is S&P 500 on animation. So it makes people to have gain much more knowledge about S&P 500. So let's try to see this, okay? And I'll do my best and I'll analyze here. So mainly S&P 500 means the standard and the poor index up to uh, top 500 companies listed on the various stock exchange. Okay, now yeah, mainly from New York Stock Exchange. And then Dow Jones Industrial Average, there is another index also that is from Tech Stock. Okay, so S&P 500 means Standard and Poor 500 index company. Okay, so if you understood about this, then you can gain and you can understood about the stock market. So S&P 500 means Standard and Poor 500 company. Okay, so I'll explain you briefly. Most of the company that are there are around 8,000 or more than more than 8,000 also if they are on mm, uh, OTC market. So they have quite more companies. So based on them, only 500 companies index is considered as S&P 500. So it can provide quite more return. And according to Warren Buffett also, this company is investing on the index fund provide much more return than investing on a stock also. So it is based on the index of publicly traded top 500 company in United States. Okay, so there is different index like New York Stock Exchange, then Dow Jones Industrial Average also. Uh, Based on 500, Dow Jones is based on the tech stock, but S&P 500 means all the publicly listed companies in USA. Okay, which track about the largest publicly traded company in USA, and I think it covers around 40% of total US stock exchange market value. Like Nvidia, yeah, largest it is the largest company in the world. The next one is Google, then Apple, Microsoft, then Amazon, Meta, Tesla. This company are considered in the largest company, and they have quite much more advantage, and they can uplift the index very high as compared to another companies which has quite low market cap. Okay, so this index mainly is used to judge for the market performance also, and it is best for the long term wealth builder who want to invest the massive amount and the huge sum of the money, because S&P 500 always denote the economic condition of the USA. So if that all the 500 companies maybe digard, then the whole US economy will digard. So that this company so S&P 500 always play a crucial role for creating the wealth, and most of the institutional fund and investor used to invest on S&P 500, and it cannot be manipulated, and it is not volatile as the stock also. So we can control the stock, but we cannot control the whole index. So if we just invest over the index fund, then there will be the safe, and we can get a return also, and our money will be safe, and we will not lose money on as a index fund like S&P 500 also. So here I think what kind of a company I have already said about you about this Apple, Microsoft, Google, Amazon, Meta, Nvidia also. Then various sector companies from technology, Nvidia, Tesla, Amazon, then finance, Berkshire Hathaway, JP Morgan, Wells Fargo, and healthcare company. That United Health, then another one Lilly also is on S&P 500. Then energy, when you consider about the ExxonMobil, Chevron, okay, and consumer good like Walmart, Costco, then another also that certainly forgot that name, consumer good. Sorry, that another company is also there. Uh, Sorry, I'll explain it later about that one consumer good company. That consumer good General Motor also used to fall on that. And I have already said that bigger companies will affect more on a S&P 500. So if Apple stock rise, if Nvidia stock rise, if Meta stock rise, if Alphabet stock rise, then yeah, it can rise the whole index. Then if the stock of certain small companies rise, okay. So I think let's talk about its average return also. It can provide up to the 10% per year on the average return on long term before inflation also. So it can provide high return on some year and less return on some year, but average it was on 10%. Okay. Like index fund with how people used to invest in S&P 500. Their money will be goes on various ETF also, like ETF like SPY, BO, IBB also. And it is very good for beginner also. So it can helps you not to lose your money. If you just invested your money on certain volatile stock, then there will be the high probability that you can lose your money, but on index you cannot lose. So consider about this. And will be very low risk than picking a single stock. Okay, so when you pick a single stock, there will be the high risk. Okay, so we can lose all of our money, but on S&P 500 we cannot lose. So I'll showcase you about the term, okay, and how to see this average return of S&P 500. Here it was just over the yearly performance of S&P 500, but we'll see here around up to 10 year or more performance of this index, okay, so that we can get and we can maximize our return. And then later we'll analyze based on its technical perspective, and most of the people are used to be familiar on technical perspective. I don't need much more explanation about that. Now we'll consider from 1985, okay. And this is on here chart, okay. Now we will make it on table format. So see here, up to 32 year, it has provided a positive return, and just for a 1 year return was negative on 1984. And then here also, I think on 1990 also, then 1994, then 2015 also, 2011. But the return was very negative on here. 2008, there was a massive financial crisis. Okay, I think you have heard about this, and this was the time where dot-com bubble used to happen. So dot-com, various dot-com companies collapse at this phase. Okay, so you can understood about this. And here also on 1994 also, most of the company uh, collapsed during that year also. 1994. Okay, there was also the crash. So let's consider about this, and it can provide. See here, 23, 24. Now, when the most of the tech companies, when they are listed on US stock market, they have provided massive amount of return with high yield. Okay, then other traditional type of company, because tech company has influence, and they provided their services to all over the globe without spending much more money on manufacturing, building, and then other infrastructure. So they have a much more advantage than other. See, just about Facebook. Facebook is earning a billion of dollar of the money just making us accessible through the mobile phone. Like Alphabet also. Alphabet is selling software. If one software is made, then if it becomes success, it can be distributed massively without any manufacturing. So we have to do regular maintenance on software, but that like a traditional manufacturing, it has advantage on software. So we consider about this, and I think let's see just from return 2007 to up to here, up to 15 year it has provided a positive return, and 5 year it has negative return from 2008, 2011, 2015, then 2018 also, then 2029, 2022 also, then 24, 23 a year. All these things are positive. Consider about this, and let's try to draw the support and resistance. But support and resistance mainly doesn't work on index fund, because US economy is one of the most well developed and most advanced economy in the world, and US dollar dominance is around 90% of the global trade. So US is the best market for all the investor, those who are willing to earn money, and it is a worst market also because here are more than 8,000 companies, so only few company can provide a good amount of return. So we have to consider about this, and we have to invest there. So basically on the top from the zone from where stock has been started falling, then we will call it as a resistance, and from where stock has been started to move on upward direction, we call it as a support. The support and resistance are quite uh, relative term but opposite, one falling, one moving upward direction. Then we consider RSI indicator. Then we'll use accumulation distribution also. RSI indicator, based on RSI indicator, let's try to see this. See here, only this phase it is on below 30, and RSI below 30 is considered as over sold zone. So okay, here was overbought zone on RSI above 70. Okay, so RSI above 30 is considered as only one time, two time, three, four, 5, 6, 7, 8, 9, 10, 11, 12. Only 12 times it is on RSI below 30. So it doesn't come below 30 because US economy is very good then comparatively to another large economy like China. China has autocratic system, so their economy is not good because most of the investors are from their own native people. But on US, most of the investor will be from abroad also, and abroad investor will also invest on US stock market, and they are getting quite a good return also. But on China, that is not possible. But India also becoming that investing of most of the foreign investors are used to invest on India because it is a democratic country, and democratic practices has quite good transparency than autocratic country like China, Russia. Okay, so consider they have good economy. China has good economy, but most of the people they don't invest in their stock market. You can see their stock also, but in Hong Kong, that was another thing. But that stock exchange, Shanghai Stock Exchange, okay, most of the foreign investors are not there. So consider about this, and just try to see this, and we have discussed about support and resistance. Now accumulation distribution, I think, but most of the accumulation distribution, if more stock has been listed, then we can see here accumulation distribution. See here how accumulation distribution was there. Most of the people has occupied their stock, so it is on positive way. Okay, 3.13 trillion. Okay, this was it's I think value. Okay, so consider it was an quite a high accumulation, positive accumulation. We can see negative accumulation also on various stock. Let's see, I'll showcase you about the negative accumulation of certain stock. Okay, which is falling down. Or okay, let's try to see this. from all the year it has the positive accumulation. Okay, now here it was only in the year 1950 there was the negative accumulation, but after that accumulation is always on positive phase. But I'll showcase you about GoPro. Okay, that accumulation was on negative phase. And see, now just see about GoPro. See, its stock is on negative accumulation. So so its stock price is also falling now. See from here, that is all time high was around this phase around 100, but now it is on $1. So if you have just invested your money on GoPro, then you have to bear the massive amount of a loss. But on an index fund, that is not possible. So up to 1 or 2 year, there may be loss, but up from 5 year, you may get the positive return. On gold also, that thing is possible, but on stock, there will be the high risk. So always try to minimize your risks and always do your best. Okay. And if you have any confusion, then try to comment on our comment section. And my English language is not good as I am not a native English speaker, so there may be issue. So hope all of you will support and all of you will try to listen my voice and always try to learn something new. And if you just learn something new, then you can earn more. Okay, have a great